This interview is brought to you by First Majestic Silver Corp, one of the world's purest and fastest growing silver mining companies.
Welcome back to Cambridge House Live. I'm Vanessa Collette here at the Canadian Investor Conference, Vancouver, and I'm thrilled to have Marin Katusa back with us again. He is the New York Times bestselling author of The Colder War and also founder of Katusa Research. Great to see you, Marin.
Thank you.
Now, Marin, you just formed a new company.
Yep.
Can you tell us a bit about it?
Sure. After a decade with Casey, I decided it was time to do my own things. I still manage all the hedge funds, and I got my team and my office in Vancouver, downtown, and I decided, you know what, I'm going to as I do all my research for my hedge funds, I've got a very large following, and I provide all my research for free on our website.
And now, we were talking a little bit before filming, you've typically been known more as an energy kind of speaker, so are you going to be mostly focusing on that, or are you diversifying?
I focus on where the opportunities are. There's no secrets about my mining investments, like one of the founding directors of Copper Mountain, still on the board, been on the board for 8-9 years now, continue to be on the board. So I look where the opportunities are and I work backwards and try to figure out how to optimize the situation and really create as much leverage to where I believe things are. So whether it's alternative energy in Altera, which I made a big investment with Ross Beatty in recently, or uranium with Uranium Energy Corp, or Brazil Resources with both gold and uranium arms, I look at what I think is going to be a big opportunity and then try to focus in on the specific company with the right management team.
Right. Are you bullish on uranium right now if you're getting involved with some uranium
Definitely.
stories?
It's been my top pick at this show last year was Uranium Energy Corp. It's over doubled since then.
Wow.
And I think it's going to go a lot higher. All the analysts in the industry have increased their target to over $4, and Amir and his team have done a great job. So again, just because you're bullish on a specific commodity doesn't mean you should go and buy every single stock in the company. Pick the right management team who, people, and then focus in on where you think your risk appetite is. For me, I like North America, and I wouldn't be investing in early stage African projects or something. That's not what I'm looking for. So basically, I'm our fund only owns 9 positions.
Okay.
So I'm very focused.
Yeah. Now, what is making you so bullish on uranium? Is it basically just Japan restarting reactors?
No,
plants?
if you look at, there's no question that Japan's restarting is going to happen, but like I said, for the last few years, it's going to take longer than people expect. But that's big in itself. But the Chinese are going to have 26 reactors come online. For example, UAE, I did an interview with Mohammed who runs the ENEC. They're building 4 reactors. They're 70% built. That's going to be 26% of their electricity generation.
Wow, right.
But more importantly is, where are the reserves going to be replaced? It's been such a bad market. If you look at the North American producers, they've been trying to prove to the market that they can produce, and you look at the ISR declines, I think the worst possible thing you can do is hedge yourself in a bad market. You're depleting your reserves. Kazakhstan, if you look at the US, they've almost increased their imports of Kazakh uranium last year by 80%. The US imported 94% of what they consume. So you look at long term, you look over the next 5-10 years, where is the new production going to come from?
Right.
And if you look at where the growth is going to be, they're not areas friendly to the US, they're areas friendly. I got a whole chapter in my book about it. So, longer term, that's why I'm very bullish, and you want to go to where America needs the uranium. And I think that, for example, UEC has been a great pick, and everyone's made a ton of dough with it.
Now, Marin, how sustainable do you think $60 oil is?
You see, I've always said early on that, look, Saudi Arabia and OPEC, it's about market share, international market share.
Right.
The shale game, and I said to everybody who was willing to listen that innovation by necessity. The costs are going to come down in the shale game, just like in every industry, whether it's computers and all that. And we were so early in the shale game that everyone was willing to write it off. I was one of the few guys that debated, even partners in my firm, saying, no. Oil in the US, they're going to survive, not everybody, but you have now the shale, the OPEC, fighting for market share, but then also the Russians.
Russia, yeah.
And everyone forgets about the Russians.
Right.
And never underestimate Russia's resource sector. So I think that you'll probably see oil fluctuate between that $40 to $70 for the next couple of years, subject to no major, one of the 7 choke points closing, like the Strait of Hormuz or the Malacca Strait. So I think that how viable is it? I think we're in this trading range for the next couple of years until the emerging markets get going again.
Right. Now, when we last spoke, we talked a little bit about emerging markets making more and more deals with each other. Obviously, you have the BRICS Bank and the China Infrastructure Bank. But is China really importing as much oil as it was before during its big infrastructure build-out?
Definitely, actually more. So what they've been doing is now they've been getting away from Saudi oil and they've doubled, for example, no one talks about, since December 2014, China's doubled their Russian oil imports. They've increased their oil imports from Iran. So these are countries that a lot of people aren't paying attention to, but yet the yuan is the world's number 2 most traded currency. It's not the euro. And where did it start? Russia. Where are the big contracts going forward? There's this whole new Eastern Bloc working together, and they recognize that they can't be under the thumb of the IMF, so which is really the thumb of the US. So they're going to move forward. It's going to take time, but they are putting in the pieces for their future.
I got the sense that China is starting to focus a little bit more on, I guess, transitioning its economy into self-sustaining, consumer-based economy, and that the infrastructure, massive infrastructure building that we saw has been slowing somewhat. So why do they need double the oil?
Well, from Russia, they doubled their oil, but if you look at it, right now the Chinese refine just under 13.5 million barrels of oil a day. The Americans are just under 18.2, it's around there. So where's the growth? There's no secrets that the growth is going to be in the emerging markets in China. You look at the growth from just 15 years ago, it's increased by 5-fold. So that's a big refining increase. Saudi Arabia is trying to build their refining capacity so they can export refined products like the US are trying to do. You'll see all the countries are going to do what's best for themselves, but it's all about securing a long-term safe supply. That's what China's about. They're apolitical. They don't really care what the Russian agenda is or the African agenda. They just want to secure resources to feed the dragon down the road.
Just resource security.
Yeah, and you look at LNG. Everyone's been talking about LNG. I've been saying for the last 2 years, it's a bubble waiting for a pin to pop it, because China is nowhere near, like if you look at the imports of LNG, Taiwan imports more LNG than China. Okay, it's Japan and Korea make up 52% of the LNG imports globally. So when Japan brings on their reactors, as does Korea, you'll see that LNG demand decrease, so that's going to price implosion. So the Chinese are looking to diversify their energy matrix. They're building 26 reactors that are going to come online in the next 8 years, and you're also going to see them try to get away from the apocalypse of coal. So they're diversifying just like America did 50 years ago, as will China.
Now, what's the status with the Russia-Ukraine situation, or the secession war, as you called it?
Yeah, I think you'll see it. Like I said, there's going to be no easy solution to this, because in the West, we think that Putin's vulnerable and Russia is a basket case, but their currency has decreased to a point that they're still making money on their commodities, no different than the Australians or the Canadians, right? So you don't want Dutch disease, which is the commodity goes down but your currency stays strong. They're not struggling with that. But the US and the West is really propping up Ukraine, and it really is unfortunate for the Ukrainian people. It's a battle of the two worlds. And I don't see a near-term solution to it. I've said this for since it erupted in early 14, and I don't see it changing.
What are some of the major events that investors should be watching out for right now?
I think, well, the bond market, definitely, you have to pay attention. Will the interest rates rise? I don't see it in the near term. But what about the geopolitical events like the South China Sea? People aren't talking about how China's really now claimed a new land position, and Japan and the rest of the allies of the U.S. are looking towards the U.S. to stand up to China, and now the U.S. have to make a decision what they're going to do. Behind China is Russia, and there's been large arm deals that no one's talking about positioning within the South China Sea bubble. So that's a risk. And I just think that a lot of people are looking at, we need $1,500 gold or we need $100 oil. Actually, we don't, because if you invest in the right management teams, the input costs, your tires, your labor, your electricity, your ball mills, your equipment are all lower. So the margins are going to increase, not because we need $1,500 gold, but because your input costs are lower. So your profitability, marginality is going to increase.
Starting to see that.
So that's going to be the first leg in our basing out of this bear market, getting to the bull market, and then one day we will get to a higher commodity price in copper and gold and uranium, and you want to be positioned with the right management teams at that point.
So where are you seeing the most opportunities right now for investors?
What I've been focusing on is private placements. If you look at all of the gurus in the business, they've made their big money from the optionality of the warrant.
Right.
And then I'm looking at companies that, 4 years ago were trading literally, you had an extra zero and moved the decimal place over. So $4 stocks today are 40 cents, but they're 3-4 years more advanced. A perfect example would be Altera Energy, Ross Beatty, broken slot machine. Everybody knows them. To replace the projects that they have cash flowing today would be over $1 billion. 5 years ago, he had a $2 and change stock, took out another company called Plutonic. They're now free cash flow. I believe they're going to announce a dividend. I believe they're going to list on the US exchange. And today, nobody cares about it. And I'm literally built up a big position in the company in the low 30-cent range because nobody cares. That's how you make a lot of money in this market. Go where nobody is,
right,
with the right people. Ross Beatty's buying in the market. That's a winner. You stick with winners. You stick with guys like Ross Beatty, Robert Friedland, Amir Adnani. You stick with the right guys like the Jim O'Rourke's of the world. And this is their passion. They're not doing it for the money, it's their life. And just because it's a contrarian call, the assets haven't gone away. The free cash flow hasn't gone away. And if you're patient and smart and you do your due diligence, you will get rewarded. It may take 2, 3, 4, 5 years, but it will happen.
Great. Well, thank you so much for stopping by and giving us the update, Marin.
It's my pleasure. Thank you.